Hey everybody, it's Larry Berman here. Happy June. June is a great month. It was my anniversary. It holds my birthday. Very, very quickly coming up on a big, big number for me. Not quite there yet, but it's a big, big number. And anyways, looking forward to that. Playing some of the best golf I've ever played in the last couple of weeks. So feeling really, really good. Markets, I'm not as feeling good about it, largely because of the valuation in markets. Um, Given the rhetoric out of the Fed, what's happening in geopolitics, there's a lot of reasons to be concerned, but there's also many, many reasons to be bullish on the long-term outlook for the global economy and the world based on productivity, based on a lot of new technologies that are coming, based on longevity, based on lots of reasons to be optimistic about things. But again, when you're someone like myself and you've got a value tilt to you, it gets very, very hard to get excited about markets um, when they are fully valued in terms of reflecting even a lot of the good things that we have to look forward to. So let's jump into the chart room and see what we learned this week. So this is the S&P 500 over the last 2 months, and it caught a lot of the down in April to the oversold condition, and the rally subsequent to the highs that we saw late last week and the subsequent sell-off. Who thinks technicals don't matter? Literally to the tick, the S&P 500 corrected to the 38.2% Fibonacci. So, great mathematician that lived 800 years ago, something like that. I remember going to Pisa. If you're ever in Italy, there's next to the Leaning Tower, there's a museum. There's several museums, but one of them holds the statue of Leonardo da Pisa, also known as Fibonacci. And I jumped up on the statue. My wife took a picture. Security guard yelled at me. Anyways, it was worth it. So for those of you into Fibonacci's, what we saw Friday, perfect example of I would say the interesting thing about people's behavior in that you never know in advance if it's going to hit at a certain line, if it's going to hold exactly, if it's going to penetrate through. But after the fact, guys like us, technicians, look at it and we point to it and they say, see. But it's only really after the fact. Anyways, Friday, it hit around 3:30. We got indications of closing demand. Buy order towards the end of the day, not quarter end, month end, was pretty significant to the buy side. I think the number I saw was a billion dollar buy order. So on most days, a billion or two. So that's a pretty big buy order. And then we just ripped higher. So you saw a massive, opening gap higher on the more favorable PCE data or inline PCE data. Donald Trump verdict last night. So you saw some selling there. You saw him on TV crying and whining, and it's not me, it's everybody else. My shit don't stink, it's everybody else. I don't know. I'm beside myself looking at geopolitics and the biggest, most robust economy in the world and the quality of leadership that we may have in the future. He may be able to govern behind being incarcerated. I don't know. It's you just kind of shake your head. Not again, just because I'm anti-Trump doesn't mean I'm pro-Biden. Just putting that out there. Anyways, let's look into memes. And here's Trump Media SPAC. And so going back to 2021, when we were in the midst of everything stupid about, giving kids money and letting them day trade on Robinhood, you saw this stock go from the $10 SPAC price up to 160, what was the 170 something, and anyways, then come back down to earth, have another rally as Donald Trump becomes, and then the thing comes back to, again, being worth not much. Trump media, big headlines, Donald Trump gaining popularity, he's going to be president, and so this thing goes crazy. How many analysts are actually covering this as a real company? So on Bloomberg, street coverage, ANR, analyst research, what comes up? Absolutely nothing. There's not one fundamental cover of Trump media out there. If we look at projections or actually, what actually these guys make, turns out they're losing bags of money. So, go for it, but don't, please. If you look at the options on this thing, so this thing closed at $49.09. If you look at the contracts that cover us through the U.S. election, so the November contract would cover us through the U.S. election. Let's just look at that in a little bit of detail so we have more to look at here. So the $49 call would have a last at 6 and a bid of 475 and an ask of 77. The 49 put has a bid of 2750 and an ask of 31 with a last of 29. So the skew here in terms of the put call on this thing is astronomical. Like you rarely see this, and that tells you that there's a lot of money betting on this thing to fail and very little on a success. Why? Because it makes no money, and it's likely going to, if Trump doesn't get elected, go back to $10. Like the Trump media, this thing is just not going to make any money. It's not going to survive, I don't think. Anyways, we'll see how that all plays out, obviously, as we get closer to the U.S. election. The whole narrative is just mind-boggling. So this is some of the bad in the world. Donald Trump, part of that, I think. I don't want to get into it any more than that. Let's look at some of the good. Artificial intelligence. So AIQ ETF, we've commented on this many times in recent years, and looking at the potential for a topping pattern here. When is this all stuff fully priced in? And, I think we're starting to see that behavior. Tops, again, they just take a long time. Bottoms tend to be much more acute. When you look at bottoms, they tend to be more well-defined V's, where tops, like, listen, this top here, is this a topping process? Is this the top? Again, we can discuss all that as we unpack it, but tops tend to roll, take longer times. Bottoms tend to be high volume V shape. So we're in a top here for this. How long does it last? Months, quarters, where does it correct to? It corrects to trend. Trend right now, 200-day average. I would say you got to buy dips in the artificial intelligence space. Again, when we look at what's in here and what's moving, you have a lot of names here. Is Netflix an AI name, right? Like, really? Do they use AI in their algos to recommend movies to people based on what you told them you like? Absolutely, right? It's a computer program. So again, the broad hype on AI here is just absolutely insane. But there are some very real companies like NVIDIA, Dell. Again, they disappointed about that much from what I looked at. The stock got clobbered. Why? Well, let's have a look at Dell stock very quickly here. This thing got parabolic on the hype of AI and servers and everything else. And so you miss by a little, you miss by a lot. If you look at where Dell should correct to, it probably comes back to 100 at some point, fills this gap nicely, and rising 200-day average. So we wrote some puts today on Dell at 110 and 105, out a couple of months with the high volatility off the, that's how I like to play these things. So anyways, just some thoughts there for some folks. Really just to wrap up here, the geopolitics, the U.S. election season, the markets are priced for perfection. The Fed's longer, higher for longer message. Inflation's coming. We're not going to see a rate hike. I don't think we have. But the supply of debt and bonds coming is going to just keep higher for longer out there for longer. And that's just going to be at some point, again, if I knew when, I'd have all the money in the world. At some point, it's a problem for asset markets. It's not there yet, but maybe we're starting to see some of that come out. Anyways, have a great week, everybody. If you're a golfer, I'll see you Sunday at the Canadian Open. I'll be on the 17th green in the boxes watching some of the golfers. Have a great one, everyone.